So one of the things in investing is that, the data set is too large. And so, like that spreadsheet I sent Arvind has like 13 or 14,000 stocks. And that's not even all the stocks in the world. All the stocks in the world, maybe 50,000 or something, or 25 to 50,000, something in that range. And so, just looking at one business could take you 2 3 weeks. And so, if you spend even a week on a business, you couldn't look at more than 50 businesses in a year. And, in the US, that'd be like 1% or something of the public companies. And so the key is that you have to take shortcuts which help you eliminate large portions of the universe in a very short period of time. So it leaves a wide open portion of time for the things that do look like it's a promising kind of data set to probe into. So that I think is more art than science, but you've got to have a way. And so if you for example did cloning and did 13Fs, that's a great way to cull the data set. So if you just said, okay, I'm only going to look at what other great investors have bought, then you might be down to maybe less than 100 stocks a year that you look at. And then within the 100, then you again look at which ones are cheap by your definition and within circle of competence by your definition. Then again, that 100 is going to go down quite dramatically. So you may not need to look at that many stocks in a year, and then the number becomes quite manageable.